Assalamu alaikum, distinguished panelists and esteemed participants. I offer you a warm welcome to the 18th BDRAL monthly webinar. I'm Samira Soni, your host for today's session. I am currently working as a research associate and also playing the role of the acting head of research advisory and training unit of the Bangladesh Rating Agency Limited, which is a subsidiary of Dun & Bradstreet South Asia Middle East Limited. Thank you all for joining us for this enlightening discussion on Universal Pension Fund of Bangladesh, the role of economic inclusion. So before we begin, let me take a moment to introduce our esteemed panel of speakers. So we are very, very privileged to have with us a very eminent professional, Dr. MD Anwarullah, FCMA, as our distinguished panelist. Dr. Anwarullah is a Bangladeshi civil servant working for more than 30 years. He has vast experience in public administration, public policy, public finance, and in the administrative and financial affairs of rural government institutions. So currently he is working as the Joint Secretary at the Bangladesh Secretariat Dhaka. Dr. Anwarullah received his PhD degree from the Asian Institute of Technology, Thailand. He is an FCMA, a qualified cost and management accountant from the Institute of Cost and Management Accountants of Bangladesh, ICMAB Dhaka. He did his MBA with a specialization in corporate strategy and economic policy from the Maastricht School of Management in the Netherlands. He has also earned his PhD in managerial control and management information system from the same university. He obtained his bachelor's degree from University of Dhaka with honors in accounting and earned his master's degree from the same university in accounting. So we're very much privileged to have you with us, sir. And we are also very deeply privileged to have a very seasoned professional, Mir Ariful Islam. He's a managing director and chief executive officer of Shandhani Asset Management Limited. He has nearly 17 years of experience in the fields of equity research, investment management, and servicing a diverse range of clients, both foreign and domestic. He has experience in prominent institutions, including International Finance Corporation, Mott MacDonald, the Bangladesh Institute of Development Studies, and Monash University Research Fund. He holds a bachelor's degree in business administration with a major in finance and a master's degree with a major in accounting information system, both from University of Dhaka. And additionally, Mr. Ariful Islam has been an associate member of the Institute of Chartered Secretariat of Bangladesh since 2018. So we are very much privileged to have you with us, sir. And we are also very glad to have with us a very experienced professional, our keynote speaker, Ms. Kazi Bushra, Senior Rating Analyst of BDRAL. And last but not the least, we have our Honorable Chief Executive Officer, Dr. Said Abdullah Mamun, FCMA, as the moderator of this program. So we are very honored to have such esteemed professionals with us today who will share their insights on Universal Pension Fund of Bangladesh, the role of economic inclusion. I would also like to add that our audiences are free to ask questions regarding the topic. Please type your question on the Q&A section. Our distinguished panelists will be glad to answer your queries. So to dive into the discussion, I would like to request Dr. Said Abdullah Mamun, FCMA, to take the floor. Over to you, sir.
Thank you. Thank you, Samira, for your nice introduction. And respected ladies and gentlemen, welcome all of you to the monthly BDRAL webinar on the Universal Pension Scheme. Let me go through. Can you see my screen, please? Can anyone confirm me?
Yes, sir. Yes, it's visible.
Okay. Thank you very much. Uh, BDRL, as a Dun& Bradstreet South Asia Middle East Limited subsidiary, always passionate to provide a credible a credit rating and other value-added business services to our clients so that they can grow in a sustainable manner. And in this case, BDRL holds the priority of continuous learning and development within the organization and also in the industry. With that objective, BDRL has taken different initiatives persistently, and one of the initiatives of holding monthly webinar on the contemporary issues related business and economics. As part of that initiative, today's topic is the Universal Pension Fund Scheme of Bangladesh and how this fund can expedite the economic inclusion of Bangladesh. Sorry. So this is my privilege to introduce the BDRL to today's participants and panelists. So the Bangladesh Rating Agency, as a subsidiary of a global company called Dun& Bradstreet South Asia Middle East Limited, started its journey in Bangladesh with this incorporation in 2008 and licensed by Bangladesh Securities and Exchange Commission, also accredited from the Bangladesh Bank, the central bank of the country. It provides credit rating, advisory, research, and the training services to our esteemed clients. And we are very honored to have our all reputed financial institution as our shareholders as well, including Dun& Bradstreet and other local reputed financial institutions. And our parent company, Dun& Bradstreet, established in 1841, is almost more than 180 or around 200 years old company, and it has almost 520 million business records at this moment and operated almost 200 markets across the globe. And almost 90% of the Fortune 500 company rely on the DNB data. And it has a very glorious legacy, which incorporates or demonstrate that 4 US president were also working in the Dun& Bradstreet. And Dun& Bradstreet Southeast Middle East look after the operation of the Dun& Bradstreet in the South Asia, Middle East, and African region of the 67 markets. And it has 7 line of operations: risk management solution, rating agencies, credit bureau solution, sales and marketing solution, economic analysis group, research and advisory services, financial technology services. And the key engagement of the BDRL in Bangladesh market is it deals with an credit rating. We provide the credit rating services for both corporate as well as government entities, including the non-profit organizations and NGOs, microfinance institution, financial institutions, banks, and also SME entities as well. And we also provide the advisory services with our high quality human resources who dig down the issues and the problems of the business and try to come up with their best possible solution so that the business organizations can come up with their effort to overcome the problems and move forward with their sustainable growth, and which comprises that management advisory services, ESG advisory, rating advisory, due diligence services, economic and industry analysis. And we have also some publications which we regularly publish, that BDRAL Economic Outlook, BDRAL Monthly Business Bulletin, SME Outlook, Impact Analysis Report. And also we conduct some training for the internal human resources and also for the industry people. And our credit rating services comprising like corporate entity rating, bank insurance, NBFI rating, bond rating, insurance company rating, an NGO and MFI rating, project rating, SME rating, bank loan rating, and also personal rating. And it provides the uniqueness of the BDRAL credit rating provides that it's an independent opinion. We do not compromise the professional independence for providing the credit rating. And rating analysis is done by internationally trained analysts. Our analysts are continuous in the learning process, both in the domestic and also they are trained in the international context. And insights from the financial strategy, like our analysts dig down the issues and try to build the information which will be helpful for the financial strategy formulation and the assessing the existing financial strategy of our clients as well. And as a whole, the inputs provides the clients as the input for their business decision making so that they can take prudent decision and drive their business activities uh, for their ultimate goal of sustainable growth. And our other services, as we mentioned, that we have advisory, research, and the training services. And so far up to today, we provided credit rating services, some more than 40,000 SME rating, more than 350 uh, uh, corporate ratings, and also we have provided advisory and other services to the 8,000 companies in Bangladesh. And the uniqueness of the BDRAL is that it's a subsidiary of the global company. So we have the experience and association and the resources of a global company who have been playing its role for the 200 years and highly qualified and international trained human resources. We always try to nurture our people with the contemporary knowledge and understanding. And today's session is also one of the examples. And the robust credit rating methodology, we developed the credit rating methodology based on the risk mapping approach. We try to identify the risks precisely based on the available qualitative and quantitative information, and also incorporating the local and international guideline. And continuous economic and business analysis by the BDRAL helps our analyst and the whole BDRAL team to be more more familiar with the contemporary business challenges and the risks, as well as the country and economic risks. And also, the countrywide business network helps the BDRAL to ensure the quickest and appropriate services to our clients around any corner of the whole country. And the underlying objective of the BDRAL to find the truth from the data so that our clients get the better input for their business decision making. That's why we say that our analysts find the truth from the data to ensure the better insights so that our clients can use these insights as the better input for making their business decision, which gives them the competitive position in their business operation. And as a whole, we try to ensure the credit rating, credible credit rating to our clients so that they can achieve their sustainable goal, ultimately growth. Ultimately, it also drive the overall economic growth as well. That's why we are committed to ensure the credible credit rating for driving the sustainable growth of our client as well as the whole economy. And BDRAL is a knowledge-based organization and trying to learn and sharpen our understanding in the continuous basis. And as per that initiatives, today we have chosen the one of the most contemporary issues, that is the universal pension fund and its implication, that how does it will be helpful for the economy to achieve its inclusive growth objective. And today we got the very eminent panelists, both from the private sector and the private public sector. And our one of the brightest colleagues, Kaji Bushra, will present the key features of pension fund. So thank you very much. And again, welcome to all. Hope this session will enlighten all of our understanding and give the privilege to listen from our panelists to be more clear about the role of the pension fund. So thank you very much. Over to Samira.
Thank you so much, sir, for such an amazing presentation and giving us a thorough tour of BDRAL and Dun & Bradstreet. So to begin our proper discussion, I would like to invite our keynote speaker, Ms. Kazi Bushra, Senior Rating Analyst of BDRAL, to present her presentation. Thank you. Can you please unmute?
Can you hear me, Samira?
Yes, I can.
Okay. Can you share, see my share?
Yes, yes, absolutely.
Okay. Thank you. Can you see me?
Yes. Can you please give the presentation mode? Click the presentation mode.
1 minute, please.
And it's underneath over here, underneath the photos, there is a presentation mode.
Can you see it?
Yes, I can see it very well, but can you please press the presentation mode or start the presentation mode in full screen? Can you do that? Yeah. Yeah.
Thank you, everyone. Assalamu alaikum. It's a great honor and opportunity for me to take part and to talk on such an important topic in front of the audience. Thank you, everyone. And these are the pictures of the marginal people whose future is uncertain, and most of them are not under the beneath of the social security, and can't they get any opportunity for the future security? And for this underprivileged people, the government has taken a remarkable initiative, that is the Universal Pension Fund. Let's see it. Our webinar, today's webinar is Universal Pension Fund of Bangladesh and the role of economic inclusion. I'm Kazi Bushra presenting the webinar. First, let's know what is pension fund. Pension is a retirement fund served by government to the civil employees. Pension funds can be either private or public. They are typically managed by professional investment managers who are responsible for investing the fund's assets in a variety of financial instruments. The retirement benefits are based on the factors such as the employee's salary, years of service, and age at retirement. These are the significance of pension funds, retirement security for citizens, and investment opportunities and economic impact. This is the background of the scheme in Bangladesh. The Awami League in the manifesto for the 2008 general elections promised to enact a pension system for all categories of citizens. In 2019, the introduction of universal pension system was announced in the budget speech for the fiscal year of 2019-20. Prime Minister Sheikh Hasina presented the prepared strategy paper on universal pension system at Ganobhavan on February 17, 2022, and directed the Ministry of Finance to enact a law for the purpose of the scheme. Draft Universal Pension Act was published on March 30, 2022. And the next, Finance Minister AHM Mustafa Kamal announced on 9th June 2022 that the Universal Pension Scheme would be introduced in the fiscal year 2023 to 24. And then the Universal Pension Management Act initiated in 2023 was published on January 31st, 2023. On July 2023, the National Pension Authority was formed to complete the universal pension system. And the scheme was implemented finally on 17 August 2023. And from the implementation of the scheme till September 21st, 2023, 13,444 people are registered, and the premium has been raised BDT 8 crore 81 lakh. The pioneer rules and regulations under Bangladesh Gazette are for the pension scheme, Universal Pension Management Act 2023, that was published on July 31st, 2023. And the Universal Pension Scheme Rules 2023 that was initiated on August 13, 2023. Here are the features of Universal Pension Fund. There will be a designated bank accounts through mobile financial services, online banking, credit or debit card, monthly and quarterly and annual basis premium paying facility, and deposit paying facility in advance for quarterly and annually. A text will be sent to the registered mobile number of the participant. If an organization participates in the pension scheme as an institution, the organization and employees will have to deposit the installments together. If the participant fails to pay the installment on time, they will get 30 days to clear it without a fine. After that, they will have to pay 1% of the installment as the late fee. Fails to pay installments for 3 consecutive monthly installments, the account will be suspended. The account will be reactivated upon payment of all dues. If an individual is unable to pay the installment because of a physical or mental ailment or unemployment, they have to notify the authority through the application. In case of an ailment, a medical board will decide and may allow the beneficiary to continue the account for up to 12 months. A pension authority will be able to announce banks, governments, offices, post offices as its front office to provide various services to the beneficiaries. Beneficiaries can find out the status of their accounts from the authorities' website, help desk, and front office. As per the Gazette, the Pension Authority will announce a dividend each year, and such dividend will be credited to the beneficiary's account. If necessary, a beneficiary will be able to switch from one scheme to another by showing reasons, because they will be able to take loans from the authority based on their schemes. Under the scheme, the participants will be able to take 50% of the money deposited in the pension scheme as loan to spend on their own family issues like treatment, house construction, repair, child's marriage. The money taken as loan will have to be paid in 24 installments with fees, and the pensioner will enjoy pension benefit until their death. If the depositor dies before the age of 75 of the pensioner, the nominee of the depositor will get monthly pension for the remaining time until the original depositor's age will hit his 75 year. Here are the schemes around the world, except Bangladesh, and this is USA, where they have 3 pension schemes: Social Security 401k, individual retirement account. And in UK, there are 3 schemes: state pension, national employment savings trust, and self-invested personal pensions. There are 7 government-backed senior citizen pension schemes in India. Those are Varishta Pension Bima Yojana, Employee Provident Fund, Senior Citizen Savings Scheme, Pradhan Mantri Bhaya Bandhan Yojana, National Pension System, Atal Pension Yojana, and Indira Gandhi National Old Age Pension Scheme. And under this scheme, the national payment in NPS and Atal Pension increased 23.4%. And this is equal to the rupees of 8.8 lakh crore in the year 2023. Now we will know who are eligible for this pension fund. Bangladeshi citizens, including expatriates Bangladeshis, they are eligible fund if they have NID or passport. NID for the Bangladeshi citizens, and if the expatriates Bangladeshis don't have NID, they can use passports for opening the account of pension fund, but they will have to submit the NID as soon as possible to the authority. And the people aged between 18 to 50 years old can apply for this pension scheme, and under special condition, over 50 years old can apply for this pension scheme. Here are the 4 schemes those are Probash, Pragati, Surakha, and Samudha. Probash scheme is only for the expatriate Bangladeshis. They will have to furnish the installment in foreign currency only. Upon their return home, they can continue the scheme by paying in Taka or switch to another package. But they will get their pension only in Taka. And Bangladeshi government offers a 2.5% incentive on remittance, which is applicable for Probash scheme. The second one is Pragati scheme. This scheme is for the employees of private companies. An employee working in a private organization or the owner of the organization can participate in it. Private sector employees have to contribute 50% of the fund. If the private company does not want to participate in the pension scheme, the employees can take the whole part of their own. And these are the schemes. Monthly installments are 2,000, 3,000, and 5,000. And who have invested his 42 years of installments, he will get 1,72,327 taka after this maturity, and at the age of his 60, if he invests 55,000 taka. And this is the Surakha scheme. Surakha scheme is designed for the self-employed people like farmers, rickshaw pullers, and day laborers. And this scheme starts from 1,000 to 5,000. And it is the equal monthly installments, which are, if we take the 10 years of period for the installment, participant will get 7,651 monthly installments after at the retirement of his 60 years of age. Next is our Shramuta scheme, and this scheme is for low-income people who currently earn a maximum of 60,000 taka per year can participate in this scheme. But it will be determined who will be in the poverty line by the Bangladesh Bureau of Statistics. And this Shramuta scheme is designed for the monthly installment of 1,000, and half of the money, half of the installments, that is 500 taka, will be paid by the government. And after 42 years of the installment payment, one participant will get 34,465 taka. Now let's see how to register or take part in pension scheme. It is applicable for Bangladeshi citizens, as I earlier said, and we have to apply online for the expatriate Bangladeshis also. And we have to go into the website of the National Pension Authority, that is upension.com.bd, government.bd, and we will get a unique identity ID number, and we will have to provide a mobile number, or in case of the expatriate applicants, they will have to provide an email address. And the rate of premium and the date of submission of the monthly premium will be informed through the mobile number and the email to the expatriate applicants. So the next question, a question may arise in the mind of the participants of the pension holders, that where the pension fund will be invested, where their fund will be invested, is it safe or not? The pension will be invested in government treasury bill, bond, and invested in mega projects of Bangladesh. Here I have an example of how will the government provide this much money to the public. Suppose a participant will participate in the pension fund with monthly installments of 2,000 taka, and he will pay for the 30 years of pension fund. And after 30 years, at the age of his 60, he will get 7,20,000 taka. He will pay 7,20,000 taka. And after the maturity, I suppose he will continue up to 15 years of his retirement of his pension. He will get 44,87,760 taka. That is 6.23 times more than the amount he invested, that is 7,20,000 taka. An annual return rate, it's estimated 7 to 8% from the pension fund. Another question may arise in our mind, that why should we invest in pension fund? If we invest in stock market or mutual fund, we will get a return on 15 to 16%, which is much more riskier than the pension fund. But if we invest in national savings certificates or government bonds or treasury bills, average return will be 10% with a tax rate of 5 to 10%. But universal pension fund schemes, average return is 7 to 8%, but without any tax, just tax-free. So it is more convenient for the participants to invest their fund in universal pension fund. Next slide is demographic distribution of Bangladesh and eligibility for pension fund. Here we can see Here we can see 33% of the population belongs to the age group of below 18, and only 17% belongs to the age of above 50, which is 27 million people, and 50% of the people belongs to the age group of 18 to 15, and which indicate which is 83 million people who are eligible for the pension fund. And the next is the population coverage under social safety net program and government provident fund. We can see that 1.83 lakh people are under the coverage of social safety net program, which covers 9% of total population, and only 49 lakh people, which is 3%, who are the beneficiary of government fund, provident fund, and 88% are not covered by any social safety net. Here are some data regarding the pension fund. The age between 18 to 50, the population is 8.5 crore, and about 8 crore 35 lakh people who will come under this pension fund. And Bangladeshi diaspora people are 13 million, and people with jobs in government, semi-government, who are getting the pension, these are 14 lakhs people. And by 2031, over 60 years of old people will be 2 crore plus, more than 2 crore. Here are the challenges. Here are the challenges of pension fund we can face. Awareness and confidence building among the public. The challenge is to make people understand that it's for their better life, and to make their life more easier and secured by bringing the country's people above aged 18 under its coverage. And participants may discontinue any time without completing the pension scheme time. It can be a challenge for this fund. And another challenge can be the identification of the group of people who is under the Shamota group. And this can be misused if anyone, if the identification is get wrong. And the next is challenges fund management and associated risk. If fund management is very crucial for implementation of this pension fund, investment decision must be made in a way that will generate higher income and ensure smooth transfer of people's income after their retirement. And corporate governance and transparency. The authority has to ensure good quality of service to the pension holders, like beneficiaries. The issue of accountability and good governance is very important. Transparency is the paramount important on an issue that how and where the pension fund will be invested. And last but not the least, the cybersecurity is a challenge for this fund management. Here is a scenario analysis of pension fund for the 10 years, which is analyzed by the BDRAL analyst team. Here is the four scheme, and we have taken the average investment from each group of a scheme, and the number of participants is assumed, and we have taken 10 years, so every scheme has to pay 120 installments. And with the accumulation of all the data, the raised fund after 10 years from these 4 schemes will be 18,000 billion taka after 10 years. And the foreign exchange reserve in August 2023 is $31,089 billion. Taka, and the national budget for the ongoing fiscal year 2022-23 is 6,780 billion, which is the fund is 2 times than the national budget of Bangladesh. Here are the 7 mega projects of Bangladesh, and the total of the cost of the mega projects was $2,676 billion, and it covers only 15% of the fund raised from the amount of the pension fund after 10 years of premium, which is only 15%, and 85% will be remained of the raised fund after 10 years. And if you see there, see it for 148 Podda Bridge can be built by this fund, and 34 metro rail line one can be built through by this pension fund after 10 years, and in a total 7 times of this fund will be generated of the total mega projects accumulatedly. Pension fund for retired government employees and their families under Social Security Policy Support Program. Here is the coverage of beneficiaries in lakh. That is 49 lakh people are under the coverage of this scheme, and in the case of universal pension fund, 8.35 million people will be covered under this scheme, and the budget of the social security policy support was 2,940 crore in 2020-21, but it is hypothecated that the fund will be raised from the pension fund after 10 years. It will be 18,000 billion taka. Thank you everyone for listening me with patience. Thank you.
Thank you so much, Ms. Kazi Bushra, for presenting such an insightful presentation. I would like to ask Dr. Said Abdullah Mamun to take the floor and continue our discussion on the topic.
Thank you. Thank you, Samira, and thank you, Bushra, for your highlighting not only the features of the universal pension fund, but also the calculation demonstrated, the hypothetical calculation demonstrated that it has a very important implication. If we just recall the presentation of the Bushra, there are few things boldly has been demonstrated. One is that the pension fund is an instrument, covers the all classes of the people, which will be given the future financial supports. And in case of especially the fourth one, there's a Shomota, where the government is come up with the equity theory perspectives that the government is also sharing or helping the marginal people, underprivileged people, to ensure their future financial security. The second issue is that it is definitely risk-free, but one thing we can see here that is a tax-free as well. So compared to other government instrument as well as in capital market or other options, so this is also a better options saving instruments for the all kind of population in Bangladesh, the citizen of the Bangladesh. So I believe that it is also is an instrument to promote the saving habit of us, it might be. Definitely, every fund has its own risks. And here we have the experts, we have the government financial management expert, as well as is a very senior government bureaucrats, as well as having a very in-depth understanding about the fund management. And he's also a professional accountant. And the blending of his professional global and local understanding was also professional understanding about the financial management. I think he may share a few more things. But before that, we are also privileged to have Mir Ariful Islam, who is an expert of the fund management, asset management. So before going to Dr. Anwarullah FCMA, I want to listen the inputs of Mr. Ariful Islam, that how do you evaluate the opportunities and the challenges of the pension fund, which is launched with the intention of inclusive growth of the economy of Bangladesh.
Assalamu alaikum. Thank you, Mohan Bhai. First of all, I would like to thank the Bangladesh Rating Agency Limited and its team for organizing this program on universal pension schemes, its role for economic inclusion. Also, thanks to the keynote presenter for a nice presentation. Thanks to the audiences who are with us. At the same time, I thank the government of Bangladesh for taking a great initiative like Universal Pension Scheme. We have already received the UPS Act visited by the National Parliament and the Ministry of Finance. And through today's key speaker's presentation, we got to know the details of this act. I would say that this is a timely and contemporary decision by the current government. The government has taken a long time to implement this decision, actually. As far as I know, the present government started the implementation of the pension scheme from 2014 to 15 around. And the implementation of which we saw in 2023. So the growth story of Bangladesh in the last 20 years and the continuity of the financial inclusion of general people indicate the prosperity of Bangladesh. Bangladesh is moving forward with its dignity despite the global financial crisis 2008 and 9, the corona pandemic of 2020, and the ongoing Ukraine-Russia war. In this situation, the far-reaching goal of economic inclusion of 10 crore people of the current government is really commendable. And I think it is a very brave decision of the government to launch this scheme under social safety net despite our limited resources. So actually, I want to talk about UPS from two perspectives. One is the challenges of implementing the UPS, and the other is where the money collected from the people will be invested, and how profit will come, and what rate the people will get it. That is like investment management. So my two perspectives is one is challenges and another one is investment management. Uh, so let's come on the challenges which actually I think the UPS may face in coming days. So from my viewpoint, the first one is participation of general people, which is very much challenging issues. We know almost 85% people of Bangladesh workforce are employed in the informal sector who didn't get any social security benefit. So initially, the citizens will be somewhat skeptical and not so much interested about it from my viewpoint. So they need to be made interested gradually by focused advocacy, and government need to focus on building trust on people's mind. And here, my view is that trust is very important. However, initiating EPS for such a huge population will be a gigantic task. And efficiently running this project will need much effort from the government side. Then the second point from my viewpoint is digitization of the services. Uh, To provide this sort of services under this program, maximum attention must be paid to make the process flexible and user-friendly. We can say that in recent period, the mobile revolution or digital revolution in financial sector happened in last couple of years in Bangladesh, like a number of successful MFS and upcoming digital bank. We are waiting for that. So there must be a mobile banking facility for depositing and withdrawing money from the pension scheme as well. And central payment gateway synchronization is very much needed here. Also, separate interactive, dynamic, and user-friendly app must be launched to provide smart service to smart Bangladesh, as and this is a motto of Bangladesh, Awami League government or Bangladesh government. I think another important point, that is third point, like return perspective. If I think about the return perspective, already the presenter provides some information here. But from my perspective, there are a lot of competing instruments in the market with this scheme, like government savings certificates, fixed deposits, private bonds, shares, life insurance, etc. So, as I am a investment professional, so from my experience, I have found some information that is like recent returns of some instruments is more than 12%. So the government must keep in mind that the returns of the pension scheme commensurate with the returns of the competitive instruments. Otherwise, it will be very difficult to popularize the scheme to general people. Another one important point that is, I think government may be ignored, but maybe it will adopt in future. That is inflation and cost of living. We know our economy has experienced more than 12% inflation in recent times. In this situation, the return of UPS should be determined by considering inflation and cost of living. And there should be a policy on how inflation adjustment will be done from time to time. We have seen our UPS returns is around 7 to 8%, if I am not wrong. But in case of high inflation or hyperinflation, this scheme will never give attractive returns to investors. So the UPS authorities have to prepare more clear guidelines how much the real rate of return will be after adjusting for inflation in future. I have another point, that is employer contribution. Almost 85% of the people are coming from private sector. So I personally think, it's my personal observation, private sector people will not be very interested in investing this scheme because they are not getting any additional benefit here as like a government employee. If the private sector employer contribution can be made in some way in this scheme, then a large part of the private sector will be interested in investing in this scheme. In this case, government may provide financial or tax benefit to the contributory employer. And my last observation, that is, we must be adopt here good governance and accountability. And we know good governance and accountability in every step of the project need to be ensured for successful running of this scheme in future. And it is not uncommon in the minds of the general people to have a kind of appetite towards pension scheme as government officials and employees have experienced a variety of bureaucratic complications in collecting pensions after retirement. We saw the situation in the past, right now also. So therefore, special attention needs to be given to ensure that no one has bad experience with this new public scheme. So people will want actually, what actually people want? People want to receive the return on investment on time and without any hassle. So time and hassle-free service must be ensured. So the government should remember that this money collected from this scheme is people's money or public's money. So the utmost care we need to take from the government side. So this is actually challenges I think about to implement this scheme in Bangladesh. And another perspective, what I see in implement this scheme in the market, that is an crucial one, that is investment management. So here I think uh, we have been a bit hurried in launching this scheme, though the election is coming very soon. Although it took us a long time to inaugurate or start this scheme, but from the day we launched this scheme, the investment policy should have been ready. It should be remembered that the day you started taking money for this scheme from people, your liability began to generate returns. There is no room for delaying investments in any way here. Otherwise, you would incur opportunity cost. So already government collected, government started to collect the money from this scheme. So first of all, what I think that is immediate recruitment management should be initiated. Management or the management of this scheme should be started from the government side. We know the current government has shown great success in implementing major big projects, but the financial sector has created a major source of uh, discomfort for the government. Therefore, this fund cannot be managed effectively with traditional government management. So another point is from my viewpoint for investment management is uh, capital protection. For any investment vehicle, the first priority of investors is capital protection. We all know. So the investment committee of this scheme or the UPS management cannot take any investment decision that puts the investment principal at risk. Though we already see the investment vehicles are treasury or government adopted project. But one example I tell you that is we can recall the Malaysian 1MDB fund. You all maybe know about 1MDB fund history. The misappropriation of that fund forced the Malaysian government to resign. You all know. At that time, the pension fund of Malaysian government had invested a lot of money in 1MDB fund as well. So investment decisions should take very prudently from the scheme authority. So where is the investment area? So first of all, after collecting the fund, investment those funds in suitable scheme and maintaining that funds which actually generating superior market return. The investment committee need to proper analytical ability to find out the best investment return generating source. The issue of accountability and good governance is very much important here. Another important point I want to mention, that is ensuring to restrict government intervention in this fund or in this scheme. We know that at different time period, different government conduct their activities with different political agendas. But it should be remembered that this scheme is a universal scheme and it's the public money. So this scheme should be kept away from any kind of government intervention. A fully independent commission or board or management will oversee investment decisions, operational activities, and human resource employment. In all cases, the operation of this fund can go well if the board or management retain their independent decision-making powers. And the last point I want to mention, that is investing in government instrument with caution. Though most of the investment of this scheme will go in government project or treasury investment or other profitable government investment vehicle, we know that this scheme is a social safety net scheme of government. So naturally, it falls within the responsibility of the government to give opportunity to invest the money of this scheme in good projects or high return investment vehicle of the government. And at the same time, we know that most of the government projects are done for public welfare, but immediate monetary returns are not considered. So if the government wants to use the money of this scheme it can use to consider the market return and project viability. That means project return. But in that case, there should be a clear investment policy. So finally, I just want to say the government has to arrange various awareness program with all the stakeholders to popularize this scheme at all levels of the society. At the same time, research on this scheme and expert people with experience in this sector should take in the expand the scheme. And the success of this scheme will open up new possibilities for the development of the country and will play a major role in the economic inclusion of the common people. That's all from my side. Thank you.
No, thank you. Thank you. Thank you, Mir Ariful Islam. Nicely portrayed the whole picture from both supply side of the fund as well as the uh, like demand side and the utilization of the fund. So definitely, as an emerging and fast-growing economy, we have the huge need of the fund from both government perspective as well as the private sector. So definitely, our calculation or possible calculation is also showing that, like, if this fund can attract the like participants to deposit here and has adopted this opportunity, then it will be a huge opportunity, huge scope for the government as well to generate fund. But this is inevitable that when there is a fund, there is a risk of management of this fund from two point of view. One is in governance point of view, and another is that like how efficiently the fund is managed, identifying its risks and compose the portfolio for investment. So here, this fund has its own uniqueness. That is, it needs to be managed within the framework of the government. And definitely, government has its own system, but in spite of that, that system might not be the barrier of the efficiency. I believe that. So this is an opportunity of the government mechanism also to come up with that innovative approach to ensure the governance and transparency of management is fund, also the efficiency of investing it and make sure the return for the investors for making it as a sustainable process. So in that case, we would like to listen from Dr. Anarullah FCMA, who is a very senior finance professional also, like reputed bureaucrats, having in-depth understanding, and he did also PhD in this domain. So may I request Dr. Anarullah FCMA to shed light how can government ensure the governance, transparency, as well as efficiency of managing this fund, which will be the precondition for the success of such an amazing initiative of the government.
Okay, thank you, Dr. Mamoon. Can you hear me?
Yeah, we can.
Okay, thank you. Thank you so much, the presenter Kaji Bushra Joel. Actually, it's very nice to hear from the different persons, especially those who are interested to participate as well as speak about this unique things happening in Bangladesh. And Mr. Mir Ariful Islam, actually, he raised many issues, both sides of the coin, I should say. And he very much go through the administrative management as well as the challenges issue, and also a very crucial issue like the inflation, which can erode the investment or the capital at the end of the day. So if we look into the challenges, yes, there is a lot of challenges still remain, because it is a beginning of the scheme that government has launched to cover the different state of the people, including the vulnerable groups and also the people who are working outside the country, which we call the fighter of the remittance. So taking into consideration all these things and challenges, if we look into the law and the rules frame on this issue, we can see that there are 3 different management bodies will work on this issue. If I talk about the first one is the Board of Governance, or the Board of, I think the high level body that will oversight the whole activities of the scheme, universal scheme. And there is also government, as you know, the presenter already mentioned that this universal scheme is not a transitory issue. It has got the statutory recognition of the government by the Parliament Act. So the very much legal standing or the instrumental areas of the legal side is covered by the Parliament to protect the depositor of the scheme holder. And at the same time, you know, there is an authority headed by 1 chairman and 4 members together. And there is another committee, that is the pension fund management committee. So if we look into these 3 different committee or different organ of the total management system or the structure of the government management system, that we can see the different tasks being assigned for each of the body who will regulate the whole things. Now, if we say that whether this body will work in a true or in the efficient way or not, that actually depends on the persons who will engage with it and how the government or the different committee or the body or the governance governing body will work, just looking into the future risk or the risk associated that could be arise in future. Now, at this stage, this scheme has introduced, taking into consideration very optimistic, we can say that optimistic thought of implementation process. But it's not always easy, as Mr. Mir already mentioned, that the growing concern of the inflation rate, the price hike of the commodities, and at the same time whether the fiscal policy and the monetary policy will be in line with the financial market, whether the favorable investment climate will be exist or not. Yes, it is always a challenge for every country, because in the backdrop of the global financial system or the globalization, always there is a multiplier effect of, or the spillover effect of the one economy to the another economy. So we cannot ignore it, but we cannot stop to introduce any good things. So on that basis, yes, I can say that some of the experts already say that it is how it can be the universal scheme. When most of the people, those who are not reached to the 18 or who are not able to earn, even who are under the extreme poverty level, so they cannot participate in such kind of program. So if they cannot participate, how it can be the universal? Yes, it is universal in that sense, as the prevailing law in our country said that when you will be at the age of 18, you can contract, you can make the contract, or you can be eligible to sign the registered documents, otherwise not. So as already we have learned from the presentation that the process of digital system that will be used to deposit the subscription for the scheme by the different types of scheme holder. So the registration and carrying out these types of digital system is, yes, it is challenging, because to me, the information that we have from the statistics, Bureau of Statistics, the 44% have the internet access in our country, both in rural and the urban areas. So if we think of digital method or digital system to use for implementing such kind of a scheme throughout the country, that it will raise definitely some kind of challenge. But still, to save the time, to save the cost, and to make it easier, digital system is to be there. And by course of time, maybe people will be habituated how to adopt this kind of digital method to implement this kind of program. So there is another things already mentioned, that Mirariful, the popularization. Yes, I am agree with him. The efficient management of the fund actually depends on how many people, how many participants will engage with this scheme, and whether they have their trust to deposit their money or to invest their money or to open an account in the universal pension scheme. That is also a question now. And I think it is the government responsibility, because we have to look forward to bring the country to the development height in terms of the economy, in terms of the social development, in terms of the financial inclusion, in terms of the digital inclusion, in terms of the personal financial security in the later age of the life. And I have seen in other countries, if I take the example of Netherlands, I have seen that a very, sorry, I have to, I have seen that very, all types of people. I mean, the one electrician, he was actually working the house to house. And once upon a time, when I asked him, what are you doing now? He said, I am now under pension. I said, how? Actually, it was the case of in 1999. So we, in compared to that country, if we say we are the very late mover in this regard. So I should say that we should start the good things, though it is a little bit late, but as we have seen that the Kosovo calculation, as Mr. Mahmoud said, yes, the calculation is, yes, it is hypothetical but and optimistic. But if we look into the labor force and employment status as well, if we take into consideration of the labor force, 61% labor force now in our country, if we consider in terms of their daily income. So you can see that 40% almost outside the income, but still the government make it easier for the people, those who has no income at all. If we talk about the housewife, do they be the participant of this scheme? Yes, it is said, because the self-employment is also considered in this program. And government, you see, the government has to pay. It is not mentioned in the presentation as well, how much the government spending will be to manage this fund. And that should be the responsibility of the government's contribution for the benefit of the elderly people, or for the benefit of the people, those who will be out of the job, or those who will be in a financial crisis. Then they can borrow from this fund, and they can utilize that fund, and they can refund it as well. So in many aspects, we can say that there is a lot of things actually included in the rules as well as in the act, and how to implement this. act in an efficient manner. I think it's a good start of the government, and in the backdrop of the present fluctuation of the currencies, it is a challenging, no doubt, but we cannot delay for this. And you know, the $465 billion is our annual GDP. And I have seen that in 10 years, 18,000 billion taka will come from this kind of savings. And this savings will be a kind of forced savings. Once anybody will be the part of the scheme, and he must have the forced saving attitude in his mind. That is the very good, I think, the policy of the government, that people should be savings oriented. Once you make the savings, that savings will, we know that the circular flow of income, that this public finance system will be robust in terms of the savings triggering the production, triggering the whole cycle of the economic circular flow, what we say. And as Mamun already mentioned, that this savings will be out of tax, I mean the tax exempted. So in many aspects, if we think of, or if we talk about this universal pension scheme, I think this is one of the good things, but still the challenge that we have mentioned, that let's see what we can do and how we can progress with this. And so far, the figure that we have seen here, it's a good sign that the people's interest is growing. But the authority and the people's participations in the all state, including the local government, political electorates, and the business bodies, including the service holders. And one thing I want to mention, that the government has two funds. One is consolidated fund, another is the public accounts of the republic. These two funds. But about this fund, there is nothing talked in the law or in the rules. The fund will be maintained in the Bangladesh Bank or in the hand of the finance ministry, or in a particular government bank. I don't know. That could be one of the downside, and that has to be clear out, so that many of the things still need to be addressed to make it popularize. It is true, and I should say that make it a efficient and robust scheme, universal scheme. It should be make much more popular to the grassroots level people as well. And if I give you the labor force statistics, still we can see that out of the total labor force, if we look into the agricultural labor force, it is almost 44%. And if we look into the industrial labor force, it is only 17%. And if we look into the service sector, it is only 39%. If we consider that the other people will be less interested, but these are the peoples engaged in the different labor force domain. So in terms of the percentage, or in terms of the population, those who will be still need to be addressed for inclusion is the agriculture sector. I mean, the industrial sector is only 17%. They may be more interested because of the salary bracket and the income, and in the service sector as well, but almost nearly 50% people, if we think of the only three major sectors, this agriculture sector people has to be brought into the scheme domain, so that this scheme will be more sustainable, more effective, and more covered scheme, and it will be to be said that the universal pension scheme. And one last one thing, point I would like to mention here, that the government has considered the persons with disability as well. You know, the insolvent person are also being given opportunity to be the part of this pension scheme. And if they don't have any income, even they can have scope to participate through the government subsidy. I think it is very rare in other country. It is very rare in other country. And we know as we grow after 50 or after 60, we do have a lot of vulnerabilities with in terms of the supporting our health issues. I mean, maybe if you are not the father of a son or daughter, then how can you will manage your fund to look after, to pay the medical fees? We don't have that. And yes, there will be some competition with the health insurance and insurance companies as well, and the other schemes of the bank, the commercial bank or the private bank being introduced more than last 20 years. So this will be a competitive picture. We will be able to compare with the other financial services being introduced by the other financial institution with this universal pension scheme. So in terms of the other analysis, I should say this is the best one. And yes, I would like to conclude. Maybe if there is any other question that would be raised later on. I am agree with the Mr. Mead that how effective will be the return of the investor at the end of the day, that we encourage them to stay with this kind of universal pension scheme. Thank you very much.
Thank you, Dr. Anullah FCMA, for your very holistic perspectives from the government sides. And at this moment, we would like to listen from any questions from any audience.
Dr. Mamun, one thing I can understand that there is a less people still able to access to the act and the rules. Until and unless they know it, there will be a very shallow question on this issue. But still, we love to hear from them. Whatever the, it could be very funny question. It could be very whatever maybe the response from them. I think it will be better to hear from them. Please, if anybody wants to contribute or if anybody wants to raise any questions, I think it will be better for us to know as well and give some information if possible.
Okay, so far up to now, we are not getting any questions, but meanwhile, we can come up with the concluding remark of both of the panelists. So here, like one aspect I want to just highlight or listen from Mir Ariful Islam. That is, the one aspect of the fund is going to be in a very big fund, and second is that the options of investment is limited. It is confined to the limited options, only 3 options. Out of these 3, one is that large projects. So when it's a large project, it has some risks as well to generate the return as well. This is one aspect. And another is that, like, capital market is one of the options for investing in the productive sector of the private sector. So do you think that the option of a certain percentage of the fund in the capital market would be helpful from two perspectives of the economy. One is that capital market get the liquidity support. Another is that good entrepreneurs may be in the would be interested to be in the market for getting available fund. So, what is your opinion in this respect?
Thank you, Mohan. So, very good question actually, because I'm the capital market analyst and work last around 17 years here. So definitely it would be an option for government, but uh, capital market is always a risky venture, And here I already mentioned that the management of this scheme should be highly skilled people. They must be recruit highly skilled people who know about the investment vehicles in details. So there are several investment vehicles we already mentioned. So from all the vehicles, capital market vehicles is the most risky, though return is also high from here. So definitely, government will invest this capital market from the schemes fund, but they should properly research the market and then invest in the market. And there is no bindings why government will not invest in the market. Definitely, and also from liquidity side, definitely. And last 1.5 years, our market is in very dire situation. So in this situation, we know market is undervalued. Most of the good shares or blue chip shares are very cheap price right now. So all the time, you are not able to buy this sort of shares in cheap price. So in like a 12 years period or 10 years period, you might get chance one time to get this sort of opportunities. And also by this way, the good entrepreneur get support from the government as well. So definitely, I think there is possibility to invest in the capital market. And I'm hopeful if it is not possible right now, but throughout the 10 years or 5 years or in future, government will invest in capital market from this scheme to generate good or better return in compared to other investment vehicles. Thank you.
No, thank you. Thank you very much. And now we'd like to listen from the concluding remark from Dr. Anurla FCMA. So one of the challenges we say is always in case of the government that like due to the bureaucracy, the process is less flexible. But in this fund, we found two exciting features. One is that exit option of any investors or any participants means anyone can exit from the fund. Another features is that like they may borrow for meeting their fund requirement. So these two features really are really innovative and encouraging to the people. I believe that when the wider awareness will be happened, more people will be participating in this fund. So my question is that is one challenge is like governance, transparency, efficient fund management, and come up with the appropriate portfolio management. Like it can have not only the risk-free investment option of the government. Government may also take some risky part of its investment so that the overall return can be higher, which may reduce the burden of government to repay. But here in the coming is a law has been formed, and we can see that like all features have been set. But my question is that to what extent in the coming days, the other innovation or innovative approaches which can make the fund more attractive and will be helpful for more innovative. So what do you think? To what extent those sort of innovative features can be added to the fund the quicker way compared to the other approaches we can observe in the government mechanism?
Thank you, Dr. Mamun again, and also the other colleagues from BDRAL. for introducing your organization as well. And the webinar you arranged today is really very helpful for other people as well, those who are already connected with us and hearing from us. Yes, you mentioned that there is a very good things as well as some of the challenging issues or the risky issues are there. You have to think that the government from the very beginning cannot take any risk or risky project for investment. That's why the treasury bill, the most risk-free area of investment. And government has categorized the subscription slabs as well. So until and unless 3 to 4 years after introducing this program, we cannot say how the payments methods will be settled down, because there is also a little bit challenges if we go for risky investment. If someone die, let's say started from today, if he die, let's say for 2 years or 3 years later, then you have to uh, make payment. But who will be the recipient of the money? In the act and in the rules, it is stated that the nominee will or the more than one nominee will be shared that money. But in the case of our pension, the government pension, I don't know about the private organization, but as far as I know, in my case, the inheritors, maybe I may have three son and daughter and a wife, then they will proportionately receive the amount on the date of my or the departure of my of this one. So the payment system of the deceased person is still at a question. Even if there is a minor nominee, it is also still a challenging issue how to settle down the payment system. Now, what you mentioned that how the innovative ideas can be incorporated to make is the implementation or make a good portfolio system so that maximize the benefits for the scheme investors. So yes, in the law, if you look into the section 22, I think I am not sure now, and even in the rules, it is stated that the authority, by the advice of the governing body, the time to time they can review the things, and for the betterment of the scheme holders, they can introduce the ideas, better ideas or good practices, so that the people who will be engaged with the participant of this scheme, they can be get the more benefit out of it. But the government very intention spelled out in the act and the rules as well. So innovative ideas can become from the stakeholders, innovative ideas can become from the participant or from the government. So government will analyze it. And this program already we have introduced without any piloting or any in-depth financial analysis. We just make a, and you also make a hypothetical analysis of 18,000 billion taka can be generated from this scheme for through the investment and for the payment of the subscription. But still, I believe that the investment mechanism should be very carefully proceed on, and at the same time keep in mind the inflation rate and the monetary policy, because the interest rate fluctuation is also one of the important issues. Yes, capital market definitely is one of the good idea, but the authority and the management of the fund committee and the governing body, until and unless there is a professional, the downside what I have observed, I have to mention it here because of like academic discussion, that still a lot of limitations exist. I am not sure who will be the 4 members with the chairman of the authority. There might be professional, like Mr. Mir mentioned, that if you go to the capital market, then you have to understand the direction of the capital market, the portfolio of the investment. So in that case, there might be some kind of very professional people inside the management system, inside the structure of the 3 committees or the 3 different organ of the management system. And at the same time, the very much audit issue. It is mentioned in the act and the rules as well that the audit should be conducted by the controller of auditor general. And there is already mentioned that the balance sheet and the profit and loss account, investment, all these critical financial issues will be there. And in that case, I am not sure how much will be the professionally sound those people who are currently working in the government domain, as you said, the bureaucratic spiral system. So that is also a question that the profitable investment selection is one of the important issue, and that should be done by the professional. And that should be, even if you look into the governing body or the fund management committee, I am not sure whether they will incorporate like professional people from ICMAB or FCMA, any FCMA or CA or any other professionals like that. So it is also a management limitations, I should say, still need to be addressed for efficient management of the fund in accelerating the rate of return or maximizing the rate of return and make new windows for investment. So having said this, I would like to thank you all. I think it is now around 9:15.
9:10.
So,
Yeah.
Thank you, Mr. Mamoon.
Thank you, Dr. Anurullah, FCMA. And after the day-long office, you manage your time for the discussion, and also Mir Ariful Islam. So thank you for the discussion and participating. Now, I hope we all enjoyed and enlightened. Now it's over to Samira.
Thank you so much, sir. So once again, I offer my gratitude to our honorable panelists, Dr. M.D. Anwarullah, FCMA, Mir Ariful Islam, and our keynote speaker, Ms. Kazi Bushra, for sharing their insightful analysis of today's topic. I would also thank our moderator, Dr. Said Abdulal Mamun, for successfully carrying on the program. And my warm thanks to all the audience for staying with us till the end. BDRAL will continue to arrange such programs every month, and we believe we will have your presence on them. Those who have missed the beginning of the program can watch the recorded videos on our official Facebook and LinkedIn pages and our YouTube page as well. So thank you all. Stay blessed and good night. Thank you.